Many Social Security recipients are eagerly awaiting their May payment that will soon be deposited into their accounts. With recent adjustments, this month's check might be higher than usual, especially if you belong to the group previously affected by the two old provisions, WEP and GPO. An increase in money is certainly something to celebrate. But did you know that this increase, whether just a few $100s monthly or a large retroactive payment, can also bring about subtle financial changes? Changes that, if unnoticed, could affect your Medicare premiums' income tax levels or even your eligibility for other assistance programs. So, how can you receive everything you deserve without getting caught up in unexpected costs? And what needs to be checked right now, before the May check is sent out? In today's content, I'll help you understand the potential impacts and provide necessary preparation steps to protect all your benefits while the system is changing. 1. Benefit increases are good news, but also an official income change. Receiving increased money from Social Security in May is something many retirees are waiting for. For those who have closely followed recent changes, this increased payment isn't random, but the result of a landmark policy, the Social Security Fairness Act of 2025. The official repeal of two provisions that had been controversial for decades, WEP and GPO, has paved the way for millions of former public sector workers to receive benefits they should have had long ago. Some people have already seen clear changes since April, when monthly benefits were adjusted to higher levels. Others, depending on their personal records, may have received or will receive a retroactive payment, compensating for reduced income since early 2024. The feeling of seeing the number in your bank account increase certainly brings relief. It's not just about money, it's recognition. It's the feeling that your years of contribution are finally being properly acknowledged. However, alongside this joy, what many people might not have noticed yet, or simply haven't been fully reminded of, is the nature of this increase in the eyes of the system. According to current Internal Revenue Service, IRS regulations, any money you receive from SSA, whether regular payments or one-time retroactive payments, is added to your adjusted income, called Modified Adjusted Gross Income, or MAGI. This means that an increased monthly check isn't simply extra spending money. In some cases, it also means you've moved into a new income threshold, which can trigger other changes you may not have anticipated. For those living on fixed incomes, this is especially important to consider, because even a small change in total income can affect how your Medicare premiums are calculated, your year-end income tax, or even your access to other assistance programs. Receiving an extra few $100s each month or a retroactive payment of several $1,000s may initially seem like a simple improvement, but in federal financial calculations, every number matters. The important thing here isn't to worry or panic. The important thing is to recognize that these changes are real systematic, and you need to understand your position in the bigger picture. The joy of receiving increased benefits is completely justified, but understanding the full landscape to know what you should prepare for next is the way to preserve your benefits and long-term stability. 2. Income increases can change your Medicare premiums. Receiving additional money from Social Security, whether monthly increases or retroactive payments, can bring joy and relief to many retirees. However, this can also lead to unwanted changes in healthcare costs, especially Medicare premiums. Medicare, the health insurance program for elderly and disabled individuals, calculates Part B, medical services, and Part D, prescription drugs, premiums based on the beneficiary's income. Specifically, if your annual Modified Adjusted Gross Income, MAGI, exceeds a certain threshold, you'll have to pay an additional fee called IRMA, Income-Related Monthly Adjustment Amount. According to CMS data in 2025, the income threshold to begin applying IRMA is $106,000 for individual tax filers and $212,000 for couples filing jointly. If your income exceeds this threshold, your monthly Medicare Part B premium could increase from the standard $185 to as much as $628.90, depending on your specific income level. Similarly, Part D premiums can increase by an additional 13 times $70 to $85.80 per month. It's worth noting that IRMA is calculated based on income from 2 years prior. This means if you receive a large retroactive payment from Social Security in 2024, it could affect your Medicare premiums in 2026. Many people don't realize this and may be surprised when they receive notification of premium increases. To avoid unwelcome surprises, you should closely monitor your income and understand how Medicare calculates premiums. If you anticipate your income will exceed the IRMA threshold, consider financial strategies such as appropriate income allocation, or consult a financial advisor to minimize the impact. Additionally, if you experience a significant life-changing event such as retirement loss of income, divorce, or death of a spouse, you can file a request for IRMA reconsideration with the Social Security Administration. This may help adjust your Medicare premiums to better suit your current circumstances. 3. Your personal income tax may also be affected. Receiving additional money from Social Security in 2025, whether retroactive payments or adjusted monthly benefits, not only affects your actual income but can also directly impact your personal income tax. This is one of those things many people don't notice immediately until they face their tax bill at the beginning of the next year. According to Internal Revenue Service (IRS) guidelines, Social Security benefits may be taxable if your total income exceeds a specific threshold. Specifically, if you file as an individual and your combined income exceeds $25,000 annually, then a portion of your SSA benefits will be taxed. If you file jointly with your spouse, this threshold is $32,000. When combined income exceeds $34,000 for single filers or $44,000 for joint filers, up to 85% of Social Security benefits may be counted as taxable income. Combined income here includes not just wages, interest, dividends, or pensions, but also adds half of the SSA money you received during the year. Therefore, if you receive a large retroactive payment, say $6,000 to $10,000, or if your monthly check increases by several $100s. Each month, you may be pushed into a new taxable income bracket. This leads to additional income tax that you may never have had to pay before, or increases the percentage of tax you've been familiar with in previous years. This situation especially affects those who don't have the habit of paying estimated taxes throughout the year. Since no tax is withheld on the SSA money you receive, the entire tax liability will accumulate and require payment all at once during next year's tax season. This can surprise many people, especially when they're not mentally prepared for a higher tax bill than usual. While not everyone is affected the same way for those living on fixed incomes, even a small change in cash flow can lead to major fluctuations in tax obligations. Therefore, preparation is important. You should consider carefully tracking your total annual income and consult with a tax advisor or experienced agent to estimate your year-end tax liability. This not only helps you avoid penalties for insufficient estimated tax payments, but also helps you be more proactive in retaining a larger portion of your newly adjusted SSA money. Getting increased benefits is something to celebrate, but to fully utilize the value of this increase, you also need to understand how the tax system works and take appropriate preparatory steps. In a year with many changes like 2025, being proactive is always the best way to protect your own financial interests. 4. Some income-based assistance programs may be affected, starting in May. When Social Security recipients receive increased benefits or large retroactive payments, the common feeling is greater financial security. However, beyond Medicare and income tax, there's a less noticed but equally important factor: the impact on income-based public assistance programs. Many retirees currently benefit from assistance programs such as food benefits, medication, cost assistance, utility support, or housing assistance. These programs are designed to protect low-income individuals, and most establish specific income thresholds to determine eligibility. When personal income is adjusted upward, whether through higher monthly SSA checks or receiving an additional retroactive payment of several $1,000s, your reported total income in the system may exceed limits that you previously fell within. An obvious example is Medicare's Extra Help program, which assists low-income individuals with prescription drug costs. If your annual calculated income exceeds the set threshold, you may no longer qualify or receive reduced assistance, meaning your monthly medication costs will be higher. Similarly, the SNAP program, commonly known as food stamps, also uses monthly income thresholds to determine assistance levels. Those who exceed the threshold by just a small amount may see their benefits reduced or be required to re-verify income information to continue participation. The same can happen with programs like Winter Energy Assistance, LIHEAP, or Senior Housing Subsidies. Many programs don't completely cut benefits just because you have additional irregular income, but will require you to provide new income documentation, redeclare financial information, or participate in a case review process according to state regulations. Notably, while SSA checks are sent automatically without requiring additional action from you, income-based assistance programs typically require you to proactively provide updated information when significant changes occur. If you miss this or don't update in a timely manner, you may find your benefits suspended or reduced without clear explanation. That's why many elderly people, despite increased money from SSA, still feel confused when they see their food bills, medication costs, or utility bills increase accordingly. This situation isn't meant to create worry, but to emphasize that income changes can have ripple effects in areas you might not expect. Therefore, if you're benefiting from one or more income threshold assistance programs, this is an appropriate time to review your eligibility. You can contact local agencies or support organizations for free advice and to ensure you still qualify or prepare new documentation to avoid benefit interruptions. Early preparation and active monitoring will help you protect not just your increased SSA money, but also the essential supports that help maintain your daily quality of life, especially during this period of fluctuating prices, medical costs, and living expenses. Expert advice for you and what you can do today. In a context where many retirees have just received increased benefits or retroactive payments from SSA financial experts, recommend that this isn't just a time to celebrate but also to review your entire income situation and related obligations. Rick Mahoney, a financial advisor specializing in helping seniors with tax and retirement planning, says, "If you suddenly receive a few thousand extra dollars, the first thing you should do is talk to a tax advisor. Don't let immediate joy surprise you at the end of the year when your Medicare or tax bill is higher than expected." This isn't a warning to cause panic, but a practical reminder sometimes small changes in cash flow can lead to big changes in places we don't expect. In reality, not everyone is strongly affected by benefit increases. Many people remain within safe income limits and their benefits won't change. However, for those who are near the system's adjustment thresholds, from income tax thresholds to Medicare premium limits, even a small change can be a factor creating clear financial differences. What's needed now isn't any major change but proactivity. If you already have a My Social Security account, access it to check your personal information payment history and ensure that all adjustments from SSA are fully updated. If you've never used this account, now is the time to register. It not only helps you track income, but is also the fastest way to detect if there are errors or information needing verification. Additionally, if you're concerned about impacts on Medicare premiums, or simply want to know if you should prepare for higher tax bills this year, talking early with a tax advisor, or calling SSA and Medicare directly is a reasonable step. Such calls don't need to be long or complicated, but can help you avoid misunderstandings or unnecessary future expenses. Proactively checking and understanding your own situation is the best way to ensure that your SSA increase truly represents a financial improvement, rather than becoming a source of new pressure in the future. If you found this content helpful, please subscribe to the channel so you don't miss upcoming update videos. We're here to help you understand what's happening, and, more importantly, how you can prepare early before changes really affect your life. Thank you for joining us, and see you in the next video.